There is Blackstone. I'll not focus more on Blackstone. Yeah. If you want, you can always read for yourself more details about Blackstone. It is also one of the largest private equity firm, which was started, it is also based in New York, started by those guys in 1985. By March, the first quarter of this year, so over 1 trillion, just about $1 trillion in private equity. You can see they are concentrated in real estate, hedge funds, mutual funds. You know the hedge funds. So I'm not teaching you financial derivatives. That is the only time you would understand hedge funds. You normally hedge against currency fluctuations, interest rates, and inflation. There was a time that KQ hedged against fuel. They imported jet fuel, and using the financial derivatives, what we call the forward and future contracts, they hedged against the fluctuation of the price of the barrel. So how do you hedge? You say, okay, I'm buying this oil from you, XYZ company from, say, a certain country, Middle East. And in the next 6 months, you'll be selling to us at this much. Then there was a rapid global fall of oil prices in a very significant way. And so they lost from the hedging. So they are managing $241 billion private wealth. The private wealth channel is this one of the high net worth individuals. Is this one of high net worth individuals. They were listed in June 2007. IPO at that $6 per share. They have also invested in 2 projects in Africa, that is in Nigeria and Ethiopia. There is also another large private equity firm known as Calais. This is based in Washington, D.C. You can see what is the assets under management. The first quarter of this year, some years back, 2014, they crossed the $698 million dedicated to Africa, and particularly when they injected money into the Nigerian Diamond Bank, and the shares plummeted by 90%. And therefore, they saw no business of being in Africa. I'll explain that the reasons why these large private equity firms are not interested in Africa is because Africa has its own challenges, particularly the currency risk. Currency risk. You see how the Kenya shilling has been behaving. That's what we call the volatility of the exchange rate, which is basically what we call the currency risk. We also call it in monetary economics the exchange rate overshooting. This other company, based in New York, you can see what is the asset under management. If you convert this money, it can run this country's budget several years. Just one private equity firm. The kind of money they are controlling. Most of it pension funds. The reason why, when we float our Eurobond, it becomes oversubscribed is because most of this money is from the pensioners. The rate of return in those countries where the inflation is so low, you find the APR, which is the annual interest rate percentage, is 4%. Just 4%. So if you calculate that to be monthly, then you get you borrow in those countries, your interest will be 0 point something % per month. Because the inflation is low. So, if they find, the pensioners find somewhere they can put money, which will give them a return of 10%, fair enough. So this one, the main focus is infrastructure and mezzanine funds. We had talked about mezzanine funds. And KKR is known for the leverage buyout of 1989 of that 1 billion. This one of this biscuit company. It made history. You know that $1 billion is not small money. Kenya shillings. In trillions. Leverage buyout of a biscuit company. Trillions. Between 1989, we haven't observed such a big leverage buyout until this other one of 33 billion of the 33 billion is not with this company. It is, we'll discuss it in the next slides. It couldn't have been done by one private equity firm. The private equity firms had to put their resources, mobilized to buy a company at that 3 billion. So you can see they left Africa 2017 after putting 200 million in the world largest rose farm. You know. So this is the one I'm talking of, the 2006. We haven't seen such a leverage buyout like this one of 2006. 33 billion US dollars. One private equity firm wouldn't have done that. You see? And it was a leverage buyout of the American healthcare company. You know, I had mentioned the reason why you don't find these, you find these large private equity firm exiting Africa is because, you know, Africa has its own unique challenges. If you put your money in an investment within Africa and expect that you'll have gotten your returns in 5 years, some of these companies require huge transformations. The other problem is what I've told you, the volatility of the exchange rate. If you put your money in Kenya last year, look at the volatility of the shilling between last year and now. Between last year and now. It is what we are calling currency risk. Because fine, for you to invest in Kenya, you come with dollars. You come with dollars. Yeah. But then you convert the money. You convert the money. So the exchange, you convert the money, and by the time you'll be getting your money back in 5 years, it may not be the same. It may not be the same. That is why the financial derivatives deal with that kind of hedging. You hedge against currency fluctuations. So, as these big firms leave Africa, then we are also saying that those that are specifically targeted towards Africa are doing well. Why? Because their investments are small. Small. And you can see there are several. There is the Development Partners International, DPI. There is also the Emerging Capital Partners, ECP. Yeah. They often deal with 70 million to 100 million. Not much. Like I said, all these ones that I've listed here, their targeted investments are in Africa but they are not based in Africa. That's what you'll find. They are not based in Africa. The DPI is, for example, based in London. The ECP is based in the US. Now I take you to venture capital. All these things, you know them. You know Facebook, you know Twitter. They wouldn't have been where they are today if they didn't get seed capital. I said venture capital, technology, biotech, green energy. It all has to do with innovations. You come up with innovations and banks are not ready to finance you. But then we want to see between private equity and venture capital, how do they differ? How? So, venture capital is a subset of private equity. They both invest in companies, hoping they'll make some returns. And I wanted to make clear, the leverage buyout doesn't have to be an investment in a private company. You can inject equity into a public company, and then it becomes yours. A public company that is struggling. You know, there are some companies that are listed at our NSE, Kenyan company, but they are also listed at the Dar es Salaam Stock Exchange and wherever. That's what we call the cruise listing. We shall also look at the international board market and the board instrument, and it is at this point where we shall deal with the Euroboard. You need to understand, why go for Euroboard? What is this thing known as Euroboard? You know, it is not called Euroboard because you buy the board in euros. It is called Euroboard because it was first traded in Europe. So we'll tackle the topic and you get to understand what is our status in terms of our Euroboard, the first one of 2014 and the current one that is active. So any questions for today's lecture? Any questions? Yes. 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 He's asking a very good question about private equity firm and who regulates them. It all matters. It is in which segment the private equity firm is coming to invest. If it is coming to invest in injecting capital into banks so that it acquires a bank, you know, like the case of Access Bank. Some years back, they acquired Transnational Bank. Last year, they tried CDN. Now they have taken over Access Bank. They have to be regulated by central bank. It all matters with which sector. If you're coming to inject equity into supermarkets so that you get a near market monopoly, then the competition authority comes in. Competition authority comes in to regulate that. So it all depends with which sector you are going and who regulates that specific sector. Any other question? So if there are no further questions, then we'll stop there for today, and I'll see you next week, same time.